Hey everyone, I'm Chet Wasinski, and welcome to the channel. Today we're talking about something that's more than just a transaction. It's a cornerstone of your financial future. Buying a home is one of the biggest decisions you'll ever make, and the mortgage you choose will echo through your life for years, shaping your financial legacy and your family's future. It's not just about finding a place to live, it's about making a strategic investment that builds wealth over the long term. That's why getting it right is so incredibly important, and I want to help you do just that. Whether you're stepping onto the property ladder for the very first time, looking for more space for your growing family, or simplifying your life by downsizing in retirement, the mortgage landscape can feel complicated and intimidating. Each stage of life brings its own unique challenges and opportunities. That's why, in this video, I'm breaking down my top 12 expert tips tailored for every single one of these milestones. We'll cover everything from creative down payment solutions for first-time buyers to unlocking your home's equity for that next big move, and even smart strategies for downsizers. My mission here is simple: to empower you with the knowledge and confidence to make smart, wealth-building mortgage decisions. I want to cut through the noise and give you clear, actionable advice that you can use to secure not just a house, but a home that works for you and your financial goals. By the end of this video, you'll have a roadmap to navigate your homeownership journey with clarity and purpose. Let's get started. First things first, let's talk about what you can truly afford. It's easy to get caught up in the excitement of house hunting, but grounding yourself in reality from the start is the smartest move you can make. This isn't just about the sticker price of the home, it's about the total cost of ownership. You need to look beyond the mortgage payment and factor in property taxes, homeowners insurance, potential HOA fees, and a budget for maintenance and repairs. I usually recommend setting aside 1 to 2% of the home's value each year. Create a detailed monthly budget, track your spending for a couple of months, and see exactly where your money is going. This will give you a crystal clear picture of what you can comfortably handle without stretching yourself too thin. For all you first-time buyers out there, don't feel discouraged by the numbers. There are fantastic government-backed programs designed specifically to help you get your foot in the door. Look into FHA loans, which often come with lower down payment requirements and more flexible credit score criteria. VA loans are an incredible benefit for veterans and active duty service members, often requiring no down payment at all. And don't forget to research state and local first-time homebuyer programs that might offer grants or down payment assistance. Understanding these options is key to unlocking your homeownership potential and starting your real estate journey on solid financial footing. The down payment is often the biggest hurdle for homebuyers, but I want you to think outside the traditional savings box. One of the most powerful strategies I'm seeing succeed right now is co-buying. This involves purchasing a property with family members or friends. By pooling your resources, you can not only meet the down payment requirement more easily, but also qualify for a larger loan, opening up more property options. It's crucial to have a solid legal agreement in place that outlines everything from ownership percentages to exit strategies. But when done right, co-buying can be a brilliant way to enter the market sooner and start building equity together. Another fantastic avenue is utilizing gifted funds. Many loan programs allow you to use money gifted from a direct relative as part of your down payment. The key here is documentation. You'll need a formal gift letter stating that the money is a gift, not a loan that needs to be repaid. Beyond that, actively seek out down payment assistance programs. These are offered by various government and nonprofit organizations and can come in the form of grants, which don't need to be repaid, or forgivable loans. A little research can uncover thousands of dollars in assistance, significantly reducing your upfront costs and making your dream of homeownership a reality much faster. The mortgage process can seem like a labyrinth of paperwork and confusing jargon, but let's break it down into simple, manageable steps. It all starts with pre-approval. This is non-negotiable. Before you even look at a single house, you need to get pre-approved by a lender. This involves a deep dive into your finances, income, assets, debts, and credit history. The result is a letter stating the loan amount you're likely to be approved for. This not only shows sellers you're a serious, qualified buyer, but also gives you a firm budget to work with, preventing you from falling in love with a home you can't afford. It's your golden ticket to start the house hunt with confidence. Once your offer on a home is accepted, you move into the underwriting phase. This is where the lender verifies all your information and the property's value through an appraisal. You'll submit a mountain of documents: bank statements, pay stubs, tax returns. So get them organized ahead of time. Finally, you'll face closing costs. These are the fees for services like the appraisal, title insurance, and legal work. And they typically amount to 2 to 5% of the loan amount. Your lender will provide a closing disclosure form at least 3 days before you sign, detailing every single cost. Review it carefully, ask questions, and be prepared. Understanding these stages removes the fear of the unknown and puts you in control. For move-up buyers, the biggest logistical challenge is timing the sale of your current home with the purchase of your next one. It's a real high-wire act, but, with the right strategy, you can navigate it smoothly. One of the best tools for this is a bridge loan. This is a short-term loan that bridges the gap between the two transactions, allowing you to use the equity from your current home to buy a new one before your old one is sold. It provides flexibility and can remove a ton of stress, making sure you don't miss out on your dream home just because your current property hasn't closed yet. Another powerful strategy is to make a contingent offer. That means your offer to buy the new home is conditional upon the successful sale of your current one. While this can sometimes make your offer less attractive to sellers in a hot market, it gives you a crucial safety net, protecting you from owning two homes at once. You can also negotiate for a flexible closing date on either the sale, the purchase, or both. For example, you could ask the buyers of your current home for a rent-back agreement, letting you stay in the home for a short period after closing. This gives you extra time to finalize the purchase of your new property without being rushed. Your current home isn't just a place to live, it's actually a powerful financial asset. As you've paid down your mortgage and as property values have increased, you've built up home equity. This is the difference between what your home is worth and what you still owe on the mortgage. And honestly, it's your secret weapon for your next move. When you sell, that equity is unlocked as cash profit. You can then use this substantial sum as a much larger down payment on your new, bigger home. A larger down payment is really a game changer. Putting more money down has a cascade of positive effects. First, it significantly lowers your monthly mortgage payment, freeing up your cash flow for other family needs or investments. Second, if you can put down 20% or more, you'll avoid paying private mortgage insurance, or PMI, which is an extra fee that protects the lender, not you. A larger down payment also makes you a stronger borrower in the eyes of lenders, potentially helping you secure a better interest rate. You could even use a portion of your equity to pay off high-interest debt like credit cards or car loans, simplifying your finances before taking on a new mortgage. When you're a move-up buyer, the why behind your move is often just as important as the house itself. You're not just buying more square footage, you're investing in a better lifestyle for your family. This is the time to get really specific about what you need. Are you looking for a home in a top-rated school district to give your kids the best educational opportunities? Make that a non-negotiable. Use online resources and talk to local parents to research schools thoroughly. Your real estate agent can be an invaluable resource here, providing data on school performance and district boundaries. Think beyond the school system too. What does your family's ideal weekend look like? Maybe it's having a bigger backyard for the kids and the dog to run around in, with space for a swing set and a garden. Perhaps it's being in a quieter, safer, more family-friendly neighborhood with parks, bike paths, and a strong sense of community. Consider your commute. Moving to a different area could significantly shorten your travel time to work, giving you more precious hours with your family each day. Make a list of these lifestyle priorities and use it as a filter when you're looking at properties. This ensures your next home truly enhances your quality of life. For many downsizers, selling a large family home can result in a significant cash windfall. The immediate instinct is often to use that cash to buy the smaller new home outright and live mortgage-free. While that sounds appealing, I want you to pause and consider the alternative. Paying all cash means tying up a huge portion of your net worth in a single illiquid asset, your home. Instead, consider making a sizable down payment, say 50%, and taking out a small, manageable mortgage for the rest. This strategy can be far smarter for your overall financial health in retirement. By keeping a mortgage, you preserve a large chunk of your cash. This liquid capital can then be invested in a diversified portfolio of stocks and bonds, where it has the potential to generate returns that outpace your low mortgage interest rate. This keeps your money working for you, growing your retirement nest egg. Furthermore, there can be tax advantages. Mortgage interest is often tax deductible, which can lower your overall tax burden in retirement. Keeping your capital liquid also provides a crucial safety net for unexpected expenses, like healthcare costs, without forcing you to sell your home. It's really about maintaining financial flexibility and security. Downsizing presents a unique and powerful opportunity to create a lasting legacy for your children. If your kids are struggling to get into the housing market, you can be the key that unlocks the door for them. One incredible strategy is gifting equity. Here's how it works. Instead of selling your family home on the open market, you can sell it to your child for a price below its market value. The difference between the fair market value and the discounted sale price is considered a gift of equity. This gift serves as their down payment, instantly solving the biggest obstacle for most young buyers. This is a profound act of building generational wealth. You're not just giving them money, you're giving them a foothold in the real estate market, allowing them to start building their own equity years sooner than they otherwise could have. It keeps a cherished family home within the family, filled with new memories. Legally, this needs to be structured correctly with the help of a mortgage advisor and a real estate lawyer to ensure all the paperwork, including the gift letter, is handled properly for the lender. It's a beautiful way to leverage the asset you've worked so hard for to give your children a massive head start on their own financial journey. Downsizing is about so much more than just a smaller house. It's about right-sizing your life for the future you want. This is your chance to shed the burdens of your old home and choose a property that perfectly aligns with your new priorities. Think critically about maintenance. Are you tired of spending weekends mowing a huge lawn or cleaning rooms you never use? Look for a home with a smaller, low-maintenance yard or even a condo or townhome where exterior maintenance is handled by an association. This frees up your time and energy for hobbies, travel, and spending time with grandkids. Accessibility should also be a top consideration. Even if you're perfectly healthy now, planning for the future is wise. A single-story home with no stairs, wider doorways, and a walk-in shower can ensure you can live comfortably and independently in your home for many years to come. Also, consider the financial benefits beyond just the mortgage. A smaller, newer home is often more energy efficient, which means significantly lower utility bills each month. This adds up to substantial savings over time, further stretching your retirement budget. Focus on comfort, convenience, and cost savings, and you'll find a home that truly serves you. In a high-interest rate environment, affordability can feel like a moving target, but there are sophisticated strategies we can use to make the numbers work. One of these is the blend and extend mortgage. If you have an existing mortgage with a great low rate but need to borrow more money to move up, you don't necessarily have to give up that rate. A lender can blend your old low rate with the current higher rate on the new money you're borrowing. This results in a new blended rate that is lower than the current market rate, saving you a significant amount of money over the life of the loan. For families with two incomes, it's crucial to leverage that combined power effectively. When you apply for a mortgage, lenders will look at your total household income. This can dramatically increase your borrowing power, allowing you to qualify for the home you need for your growing family. We can also be strategic about how we structure the application. If one partner has a much stronger credit score, for example, we might explore different application scenarios. It's about looking at your complete financial picture as a team and using every advantage at your disposal to secure the best possible financing, even when rates are high. I hear this all the time. I'm just going to wait for interest rates to come down before I buy. While that might sound logical on the surface, it can be a very costly mistake. The real estate market is dynamic. When interest rates are high, it tends to cool buyer demand, which can stabilize or even slightly lower home prices and create less competition. You have more negotiating power and a better chance of getting your offer accepted without a bidding war. This is a buyer's window of opportunity. Waiting for rates to drop might not save you any money in the long run. Here's the catch. When interest rates do eventually fall, a flood of buyers who were waiting on the sidelines will rush back into the market. This surge in demand will inevitably push home prices up, and likely at a much faster pace than the rate drop. You might get a lower rate, but it will be on a much more expensive home, potentially wiping out any savings from the lower rate, and then some. The smart play is often to buy the home you can afford now, locking in the price. Marry the house, but only date the rate. You can always refinance to a lower rate in the future when the opportunity arises, but you can never go back and buy today's house at today's price. Navigating any of these scenarios, buying your first home, moving up, or downsizing, is complex. You wouldn't perform surgery on yourself, so why would you try to handle the biggest financial transaction of your life all alone? The single most important tip I can give you is to partner with an experienced, trusted mortgage advisor. This isn't just a loan officer who plugs numbers into a computer. A true advisor is a strategist, a problem solver, and your dedicated advocate throughout the entire process. They take the time to understand your unique family situation, your financial goals, and your long-term aspirations. Experience and empathy are what separate a good advisor from a great one. A great advisor has seen it all: the tricky income situations, the complex property types, the market fluctuations. They can anticipate challenges before they arise and have a toolbox full of creative solutions like the ones we've discussed today. They provide personalized advice, not a one-size-fits-all product. They will walk you through every document, answer every question with patience, and ensure you feel confident and empowered at every step. This partnership is the key to transforming a stressful process into a successful, wealth-building milestone for your family. We've covered a lot of ground today, from getting your foot in the door as a first-time buyer to making smart moves in retirement. My hope is that you now see your mortgage not as a debt, but as a dynamic tool that can be strategically managed to build wealth and achieve your life goals. Every family's journey is unique, and the right advice is never one size fits all. If you're feeling inspired but unsure of your next steps, please don't hesitate to reach out. I'm here to provide that personalized, one-on-one advice to help you craft a strategy that fits your specific needs. Let's build a plan together. Remember, the decisions you make today will have a lasting impact on your financial future. Choosing the right mortgage strategy can be the difference between simply owning a house and turning that house into a powerful asset that works for you. It can unlock opportunities, provide security for your family, and pave the way for generational wealth. It all starts with having a clear plan and a trusted guide to help you navigate the process. You have the power to make your homeownership journey a resounding success. I'm here to help you on that path. If you have any questions about the tips we discussed today, or if there's another topic you'd like me to cover, please drop them in the comments below. I read every single one and love hearing from you. And if you found this video helpful, do me a favor and hit that subscribe button and turn on notifications so you won't miss out on more expert tips to help you master the world of real estate and mortgages. Thanks for watching, and I'll see you in the next video.